In the last video, I explained what Tranche 2 is and who it applies to. In this video, I want to explain why these industries are being brought into the AML framework, not from a legal perspective, but from a practical, real-world one. Because once you understand the why, the compliance obligations start to make more sense. Real estate agents, lawyers, accountants and trust service providers aren't criminals, but they often act as gatekeepers to assets, transactions and structures that make these professions attractive to people who want to move or disguise illicit funds. Tranche 2 isn't about blaming professionals, it's about visibility. The first common scenario is property purchased through layered entities. Instead of an individual buying a property directly, the buyer is a company owned by another company held by a trust, sometimes with overseas elements involved. On paper, everything can look perfectly legal, but the real question becomes who actually controls the asset. Property is attractive for money laundering because it's of high value, stable, and easy to justify price movements. The risk isn't complexity itself, the risk is hidden control. This is why Tranche 2 focuses on identifying the beneficial owner, the real person behind the structure, not just the entity on the contract. The second scenario involves trusts or companies where beneficial ownership isn't clear. You may have a valid trust deed or a company structure, but it's not obvious who actually benefits from or controls the arrangement. Trusts in particular can be higher risk because beneficiaries may be broad, discretionary, or change over time. Again, none of this is illegal, but from an AML perspective, unclear ownership increases risk. And that's why Tranche 2 expects businesses to take reasonable steps to understand who ultimately controls or benefits from these entities. Third common scenario is third parties funding transactions. And this is where the person involved in the transaction isn't the one providing the money, right? So funds might come from a family, business associates, companies, trusts, or overseas sources. This breaks the direct link between the client, the funds, and the asset, which is why regulators pay close attention to that. A third-party contribution isn't automatically suspicious, but it does require understanding and documentation. What all these three scenarios have in common is distance. Distance between the person, the money, and the asset. Money laundering thrives on complexity and separation. Tranche 2 is designed to reduce that distance by asking professionals to understand transactions just enough to make informed, defensible decisions. This is important to understand clearly. Tranche 2 does not expect businesses to investigate clients like law enforcement. It expects reasonable, risk-based steps. And that means asking sensible questions, understanding whether things make sense in context, and keeping the records of the decisions that you make. For most businesses, this will mean small changes to how clients are onboarded and how transactions are documented. The goal isn't to stop legitimate business, it's to ensure professionals aren't unknowingly used to legitimize illicit funds. In the next video, I'll help you work out whether your business is in scope for Tranche 2, using a simple self-assessment. If this video was helpful, please like and subscribe, share it with someone in your industry. Thanks for watching, and I'll see you in the next one.